All right, let's jump right into this explainer. Today, we're taking on a seriously high-stakes objective. We are filtering 5 microcap semiconductor companies through a strictly defined blueprint to find true portfolio winners. You know how it goes. We're looking for those rare, needle-moving assets that genuinely have the potential to return 50 times your initial investment. But listen, we're not relying on hype here. No way. We're going to audit these companies using a ruthless, data-driven methodology that just completely strips away the noise. If you manage a portfolio, or even if you just want to think like someone who does, you know that identifying outsized growth means setting non-negotiable rules and actually sticking to them. So let's get to work.
Here's the roadmap for today. 1. The Semiconductor Audit Framework. 2. Mapping the contenders. 3. Evaluating ownership. 4. Pre-revenue dilution risks. 5. Assessing patent moats. And finally, 6. The 2 textbook picks. Let's dive in.
Okay, let's dive into Section 1, the Semiconductor Audit Framework. This is all about building the blueprint.
So to find a company that can actually survive the brutal semiconductor landscape and scale up massively, it's got to pass 3 non-negotiable stress tests. This mimics a top-tier portfolio manager's exact decision-making process. Step 1 is confirming conviction. We need to look at who actually owns the stock, specifically the insiders and that smart institutional money. Step 2, validating the financial stage. We absolutely must weigh their cash needs against the very real threat of shareholder dilution. And step 3 is assessing the patent moat. Think about it. If a company does achieve a massive breakthrough, can they actually protect it from the heavyweights of the industry?
Just to be crystal clear, the ultimate objective of this explainer is hunting down that true 50x plus potential. But we are doing this strictly through a data-driven lens. We're not sacrificing objective due diligence just for the sake of a compelling narrative. If a company fails these metrics, it gets cut, period.
Moving right along to Section 2, mapping the contenders. Let's look at the microcap landscape.
All right, here is our playing field. We've got Weebit Nano sitting at roughly a $300 million market cap. Then there's NVE Semiconductor, which is kind of the heavyweight here at around $900 million. We've also got POET Technologies at $250 million, and finally, Everspin and Atomera both hovering right around that $200 million mark. This just gives us a really quick, rapid overview of exactly where these companies currently sit in their life cycles.
Now, notice the stark contrast in market caps among our contenders here. NVE Semiconductor is playing in a completely different weight class right now, basically approaching that $1 billion threshold. Meanwhile, companies like POET and Weebit Nano are still firmly entrenched in deeper microcap territory. And honestly, that size difference is going to play a crucial role when we look at their financial stability later on.
Up next is Section 3, evaluating ownership. This is all about finding the insider's sweet spot. So here's our first major stress test. We're weighing institutional holdings against critical insider conviction. Our baseline rule is that insiders, the founders, the C-suite, the board, they need to hold more than 10% of the company. Why? Well, because if the people literally building the technology aren't heavily invested in its success, a portfolio manager shouldn't be either. Look how quickly our funnel narrows when we strictly enforce this rule. Weebit Nano, NVE Semiconductor, and Atomera pass the test. POET Technologies and Everspin, unfortunately, they're out.
Let's zoom in on exactly why POET and Everspin miss that sweet spot. POET Technologies has about 22% institutional ownership. That's decent, but their insider ownership is sitting at a mere 5%. Everspin is slightly better on the institutional side at about 34%, and the data notes their CEO is actively buying shares, which, hey, is always a positive signal. But the total insider ownership is still fundamentally light at around 6%. For a high-conviction microcap blueprint, 5 or 6% simply isn't enough skin in the game.
Now, what's really interesting here is this single number, 12%. Keep in mind that is not the total insider ownership of our next contender, Atomera. That 12% is the personal stake owned by just one guy, Atomera's CEO, Scott Mears. I mean, talk about a massive indicator of personal skin in the game, right?
When we zoom out to the full Atomera ownership split, we see an incredibly healthy balance. Total insiders hold roughly 15%, so they're perfectly clearing our hurdle. And on top of that, you've got about 30% held by institutions. This shows us a really powerful alignment. You have the founders and executives deeply incentivized to succeed, and they're backed by the validation of smart, institutional money. It's exactly the kind of ownership architecture a portfolio manager wants to see before allocating capital.
All right, Section 4, pre-revenue dilution risks, balancing capital needs against growth.
Now, this is where the rubber really meets the road. We have a very clear division between our contenders. On one side, we have companies basically relying on future moonshot growth. Weebit, POET and Atomera are all in the pre-revenue stage. On the flip side, we have NVE Semiconductor, which is generating over $220 million in revenue and growing fast, alongside Everspin, which is actually already profitable. The revenue-generating companies have a solid financial floor. The pre-revenue companies, though, they face a ticking clock.
And that ticking clock brings us to a hard truth about POET technologies. Look, the source data totally acknowledges that POET has true 50x potential. They are building an optical interposer for AI data centers, which is an incredibly lucrative market right now. However, because they are pre-revenue, they face notable near-term funding and dilution risks. When a company needs to raise cash to survive, they issue more shares, and that dilutes the value of existing shareholders. In our strict audit, this excessive dilution risk acts as a heavy filter, effectively knocking POET out of our absolute top-tier picks, despite that really compelling technology.
Moving on to Section 5, Assessing Patent Moats, because we absolutely have to protect the upside.
Look, if you actually find a 50x winner, the big players are absolutely going to try to copy it. A patent moat is what stops them. Let's briefly review how our contenders' technology stack up. The good news here is that all the companies we audited actually perform quite well in this specific test. NVE Semiconductor boasts a strong moat in automotive AI and edge silicon. Everspin has a very strong moat as a leader in STT-MRAM, and Weebit Nano has a strong moat in ReRAM. Let's quickly break down those complex terms just a bit, so we know exactly what's protecting these companies. STT-MRAM and ReRAM are distinct, highly specialized next-generation memory technologies. Without getting totally bogged down in the engineering here, what you really need to take away is that these aren't just generic tech ideas. They are highly defensible, deeply patented innovations. This specialization is precisely what gives Everspin and Weebit Nano their strong respective moats, shielding their future growth from larger competitors who might want to swoop in.
And speaking of moats, we really need to spotlight Atomera's specific technology. They hold the patents to what is called mere silicon technology. Our audit rates this moat as very strong. This is a vital piece of the puzzle. Remember how we discussed the risks of being a pre-revenue company? Well, having a deeply entrenched, very strong patent moat acts as a massive counterbalance. It mitigates the risk because the foundational value of that intellectual property provides a severe barrier to entry for competitors, completely protecting that future revenue potential.
So, the crucial point is, we've reached Section 6, the 2 textbook picks that actually survived the funnel.
Our first survivor is NVE Semiconductor. They are a high-quality, near-profit play with over $220 million in rapidly growing revenue, and they're driven by strong automotive AI silicon tailwinds. Plus, they passed the ownership test with roughly 12% insider holdings. Now, when ranking them for sheer growth potential, the audit does note that a 50x moonshot is a stretch, given their already larger $900 million market cap. However, they present a highly realistic 10 to 12x return potential with proper execution. They are a fantastic lower-risk, high-reward survivor of our strict funnel.
And our second winner, ranking at the absolute top for that coveted 50x growth potential, is Atomera. Let's summarize exactly how they proved themselves against our data-driven tests. Yes, they are pre-revenue, but as we just established, that risk is heavily mitigated by their very strong mere silicon technology moat. Furthermore, their ownership alignment is just flawless for this blueprint, approximately 15% total insider ownership alongside 30% institutional backing. They perfectly balance high founder conviction with smart money validation.
Which leads us to the ultimate verdict on Atomera from our source data analysis. To quote the audit directly, this is a textbook setup, exactly your blueprint. It literally checks every single box we laid out in our initial framework for finding a true 50x potential winner. When you apply objective, emotionless criteria to the microcap space, these are exactly the kinds of asymmetric setups that reveal themselves.
So we've built the framework, mapped the contenders, filtered out the weak hands, and identified our 2 textbook winners, NVE Semiconductor and Atomera. But I want to leave you with a final thought to strategize over. With the fundamental audit complete, the alignment verified, and the moats assessed, is market timing the only execution risk you have left? Because understanding the data is step 1. Knowing when to actually deploy the capital is step 2. Thanks for joining me for this explainer, and keep thinking objectively.